Well, good afternoon and welcome to today's Economic Forecast Lunch with Pierre Cléroux, Vice President and Chief Economist of Business Development Bank of Canada. I am Jazrup Gosal. I'm the Policy and Research Manager at the Surrey Board of Trade, and I want to thank you all for supporting Surrey's business organization. I would like to begin by acknowledging that we are on the traditional territory of the Coast Salish people, specifically the Kwantlen, Katzie, Coquitlam, Kikite, Semiahmoo, and Tsawwassen First Nations. As well, I acknowledge the Inuit and Métis Nations people who live and work on these territories. While today's event would not be possible without sponsorship, I would like to thank our co-presenting sponsors, the Business Development Bank of Canada and Invest Vancouver. I would also like to thank our progress partners, BDC, the Chamber of Commerce Group Insurance Plan by SNF Group Benefits, the law firm of Fasken, Scotiabank, and Western Community College. Round of applause, please. Thank you. Also, please help me welcome some guests in the audience. We have Kathy Geoghegan, Consul General of Ireland, Vancouver, City of Surrey Councillor Linda Annis, and on behalf of Mayor Brenda Locke, we have Christy Warwick and Harpreet Dillon. Thank you. And please also help me welcome some Surrey Board of Trade directors here with us today. We have Baljit Dhaliwal, SBOT Chair, and with Tinker's Tax and Accounting, Rory Morgan of KSW Lawyers and Chair of our Transportation Team, David Bennett with Fortis BC and Chair of our Health and Technology Team. We have Mike Spees, Scotiabank, and Chair of our Social Policy and Workforce Development Team. We have Rick Mann of IOM Property Group and Chair of our Development and Land Use Team, Roger Steers of RJC Engineers and Chair of our Youth Team, Sasha Ramnarine, he is with Remedios and Company and Chair of our Tourism, Arts and Culture Team, as well as Raj Sidhu of Colliers International. Round of applause. The Surrey Board of Trade is an independent and non-profit organization under the Federal Ministry of Economic Development. We support business and attract business to Surrey by being the concierge of connections for Surrey's business community, where we deliver a diversified service portfolio of business development, international trade, and government advocacy and workforce development. The Surrey Board of Trade is one of the top 10 largest boards of trades and chambers of commerce in Canada. There are 430 of us, with over 6,000 member contacts. Please turn your attention to the screen to learn a little bit more. Surrey is an opportunity city. We will be the largest city in BC very soon, and that means we need to ensure that we work together as a region to attract business, labor, and harness industry clusters to meet the social and economic challenges of today and tomorrow. Our President and CEO, Anita Huberman, is newly appointed to Metro Vancouver's Regional Economic Development Management Board. And to tell you more, please help me welcome Jackie Griffiths, President and CEO of Invest Vancouver and our co-presenting sponsor.
Good afternoon, everyone. It's so nice to see so many familiar faces and to see everyone gathered together again. It's a pleasure to be with you all, and I want to begin by acknowledging with much gratitude and respect the 10 First Nation communities that the Metro Vancouver region is gathered, and also the ancestors who stewarded the lands and the water around us since time immemorial. As Jazz said, my name is Jackie Griffiths, and I'm the president of Invest Vancouver. Invest Vancouver is the Metro Vancouver region's economic development leadership service representing all 21 municipalities and one Treaty First Nation within the region. And this is very much important to emphasize that Surrey is very much an important part of Invest Vancouver. I want to thank Anita Huberman for all her support and was so pleased to see that she was appointed to our Invest Vancouver Management Board earlier this month. Our mission at Invest Vancouver is to advance a broadly shared prosperity for the entire region. This includes the 2.8 million residents as well as the 1.5 million workers who depend on a strong and vibrant regional economy. We are an economy with a highly mobile workforce where over half of our workers each day travel to another municipality to engage in employment. Protecting and propelling our regional economy can only be done through a regional lens with a coordinated and regional approach. And that's where Invest Vancouver comes in. We are looking at economic development and investment attraction in terms of how it is we can advance the regional economy as a whole to truly raise the tide and float all boats. Only when all our member jurisdictions come together as one region do we leverage our competitive strengths and become globally competitive. Each city and jurisdiction brings its unique strengths to the value proposition to ensure we are stronger together. As the fastest growing city in the province, Surrey has so much to offer in industries like we heard of today in health technology, as well as clean tech and the creative economy. All these opportunities align with the work that we do at Invest Vancouver, and you have incredible strategic advantages to bring to the region. Last month, for example, we were here with the Quantum Algorithm Institute and the BC, and we were able to highlight the work that's being done at SFU in the Surrey Innovation Centre. This is an example of tremendous work that's being done in the city of Surrey. These kinds of spaces will augment our region's robust innovation ecosystem and will help to make us more globally recognized to ensure that we are attracting the right kind of investment to the region and bringing in the right type of high-quality employment that will allow us to further close the affordability gap. As the world looks to post-pandemic recovery, we need to focus our efforts on making sure that Metro Vancouver's economy is resilient to shakes and shocks for all its residents. Invest Vancouver is here to be a unifying force, working with the City of Surrey and important groups and partners like the Surrey Board of Trade. With that, we're able to provide that strong global front door to attract the right investment and to build out a strong regional economy. I thank you for your time today, and we look forward to a very engaging presentation. Thank you.
Thank you, Jackie. Now I welcome Roseanne Horner, Vice President of Business Development Bank of Canada, to introduce our keynote speaker this afternoon. Thank you.
Hello, everyone, and thank you for attending today. My name is Roseanne Horner, and I am Vice President, Financing and Consulting for the South Fraser area at the Business Development Bank of Canada, known as BDC to most of you. I'm so pleased to be here today, and I know it's going to be a very interesting presentation from Pierre. For those of you who don't know about BDC, we are the bank for Canadian entrepreneurs. We work with over 95,000 businesses across Canada, many in BC, and of course right here in Surrey. These businesses are in all sectors. They are of all sizes and of all stages of growth. Our job is to provide business owners with financing, capital, and advice in both good times and bad. And I would like to share that our advisory services practice has a team of over 500 subject matter experts across Canada. And in the last 3 years, we have completed over 6,000 mandates for small to medium-sized enterprises. And I'm most proud that we have a 94% satisfaction rate on that work with them. To that end, we have been a strong partner to entrepreneurs throughout the pandemic and will continue to work with you by your side, regardless of the state of the economy. The last couple of years have not been easy for businesses here in Surrey or elsewhere in Canada, and I'm sure that we'll all benefit from Pierre's presentation today. Now it is my great pleasure to introduce Pierre Cléroux, BDC's Vice President, Research and Chief Economist. Pierre leads a team of experts who analyze economic data to identify business trends and sector trends impacting Canadian entrepreneurs. He regularly travels across the country to help business owners understand the risks and opportunities presented by the economic environment. Pierre is an authority on economic trends and entrepreneurship. We are extremely fortunate to have him at BDC. Over his 25-year career, Pierre has held several influential positions that have had a direct impact on entrepreneurs here in Canada and abroad. And one of his strongest suits is translating macroeconomic trends into actionable strategies for business owners. I just like to say he speaks entrepreneur. Pierre, please join me.
Good afternoon, everybody. Thank you, Roseanne, for your introduction. I think you will agree with me that it's a good time to talk about the economy because there's so much going on. There's a lot of uncertainty in the economy. So my presentation is in 3 parts. First, I'm going to talk about the Canadian economy, what we expect for interest rate, and also the BC economy. And finally, I'm going to conclude the presentation on 3 trends that we are following for business, one of them being the shortage of labor. But before I start, I want you to work. So I'm going to ask you a question. Who believe that, and please raise your hand, who believe that we are going into a recession in 2023, this year? Quite, well, not the majority, the minority. Well, I'm going to try to make some, I'm going to explain that we believe that we're going to avoid a recession. So the majority of you agree with me. We'll try to convince the other part. So, I'm going to start with before I start with 2023, I'm going to start with what happened over the last 2 years. Because what happened over the last 2 years has quite an impact on the story of what is going to happen this year. So over the last 2 years, growth has been quite significant. This is the numbers for Canada, but the numbers for BC are similar. Growth has been actually 4.6% in 2021 and 3.5% last year. What is important on this graph is the red line, which is represent the potential growth of the economy. So as you can see from the graph, the growth in Canada has been way above the potential growth. So what does it mean? You manage business, you own your business, you know what is the capacity of your business. You have workers, you have equipment, you know how much you can produce. So imagine that in the last 2 years, and maybe that's the case, you produce over your capacity for 2 years. That's exactly what happened for the Canadian economy. That was the years of the recovery, the rebound after the pandemic. And for the last 2 years, the Canadian economy produced overcapacity. So there's a good news. When you do that, you create jobs. And actually in Canada, we have been creating more than 500,000 new jobs. The result is, unemployment rate right now is 5%. This is the lowest unemployment rate in the last 50 years. However, with this good news comes a problem, and the problem is inflation. When you are running over capacity, you put pressure on price because the demand is very strong. And that's exactly what happened last year. Inflation reached 8.1% in June. This was the highest level in 40 years. So why we had so much inflation? Well, because there was extra demand, excess demand. But also 2 events around the world make things worse. First, the war in Ukraine, that really increased commodity prices, the price of wheat, canola, the price of oil and gas. So that really contributed to increased prices. The second event, or the second factor, is we had a lot of supply chain disruption. You probably have experienced that, difficulties to get your products that you bought from outside Canada. That also put pressure on price. So that was a perfect storm. And with the perfect storm came inflation. In the reaction to that, because inflation has quite a negative impact on many people, especially on low-income people or people with a fixed income. So when the price of food is increasing, this is really having a negative impact on many people. Also had a negative impact on business. It's more costly to do business. So in response to that, the Bank of Canada has increased interest rate 8 times in the last 10 months. So the prime rate now is 4.5%. So this is a starting point for 2023. Strong growth over the last 2 years, high inflation, And interest rate is increasing, which is slowing down the economy. So this is where we are starting this year. So what is going to happen? The most important factor for us is inflation, because inflation is going to dictate the interest rate path for this year. The good news is the pressure on price is actually really slowing down. The excess demand we had is phasing out. The problem with the supply chain is also almost under control. In some sectors it's still difficult, but in most sectors it's actually gone. And commodity prices went down. So they went back to the pre-war level. The war is not over, unfortunately, but the impact on price is down. And finally, the job market is still very tight, but we're not seeing salary increase at the same pace than over the last 2 years. So the pressure on price is much less now than a year ago. And we see inflation over 12 months is 6.3%, but the red line is actually the most important now, is the inflation over the last 3 months is 1%. So that's a leading indicator for inflation. So that means that inflation is really slowing down. By this summer, inflation should be back to, I would say, normal, 1 or 2%, and in the bracket of between 1 and 3%. So this means that interest rate will not keep increasing. Actually, the Bank of Canada has announced 2 weeks ago that they're not going to keep increase interest rate in Canada. So that's the first good news. So that means that the prime rate is going to stay at the same level, probably for another 6 to 8 months. And after that, we believe that interest rate will start to decline by the end of 2023 to reach 2.5% somewhere in 2024. So the impact for the first 6 to 8 months, we will see the impact on some part of the economy of high interest rate, but by the end of the year, we will see more momentum in the economy. Because when you increase interest rate, you have an impact on the economy. And one of the impact is people pay more for their mortgages. So the graph that you see is the average monthly payment for mortgages in Canada. As you can see, it has increased by 22% over the last 10 months. So every month, people pay more for their mortgages. A new phenomena, people pay more, they pay back their loans much more today than before. And it makes sense. As interest rate is increasing, people are repaying part of their mortgage. They are repaying their line of credit. That's a good news for people, but actually it does have an impact on the economy because it's slowing down consumption. So consumption in Canada has been going down because as interest rate is increasing, people has less money. So they pay more for their mortgages, they repay part of their debt, so they don't have as much money to spend, which is slowing down the economy. On the business side, business investment intentions are going down. Businesses are still investing, but not as much as over the last 2 years. So for Canada, if I try to summarize what's happening, last year, everything was green. Consumption was strong, except maybe for real estate that started to decline. Business investment were increasing. Our exports were doing well. So we had very solid growth in 2022. This year, we are seeing a number of red flags. Consumption is slowing down. Business investment are going to be lower, and our export is also slowing down. So what does it mean? Are we going into a recession in Canada? Well, not necessarily. Our forecast is modest growth, which is growth close to 0%. I'm sorry, my clicker doesn't work. Okay. So our forecast is almost zero growth this year. So not a recession, but definitely the increase of interest rate is slowing down the economy. As interest rates are declining by the end of the year and in 2024, growth is going to pick up at the end of this year, but mostly in 2024. So when you look at this graph, this is not a recession. However, the slowdown will be felt in some sectors more than others. In real estate, for example, in consumption, retail sales, some part of manufacturing as well. So the economy will be much slower this year than over the last 2 years. but we should avoid a recession. There's no doubt that as you increase interest rate, the risk of a recession is increasing. And some economists have forecast a mild recession. And I put the two scenarios on the same graph to show you that the difference is very small between slow growth and a mild recession. You know, when we use the word recession, recession has a really bad meaning. It's like the word Vendemore. Nobody wants to use that word. But a recession is just negative growth. So it could be slightly negative, for example, minus 0.5. And that's very different than minus 5. Same thing for your business. If your sales are declining this year by minus 0.5, you won't be too worried. If your sales are declining by 10%, you will be really worried. So same thing for the economy. Nothing compared to the two last recession. The growth is be quite flat. One last word on this graph. The reason why we're more optimistic is because the situation is quite different than over the last two recessions. The last two recessions came from outside the country. 2009 was a financial crisis in the US, and that led to a world recession, including in Canada. 2020, everybody remember that one? The pandemic, we had a major recession. This time around, everything is actually going well, but there's too much inflation. So the Bank of Canada is increasing interest rate to slow down the economy. So the economy is slowing down. The strategy is working. But they have much more control on the situation today than over the last two recessions. So that's why we have all the reason to be more optimistic. We're not going into a recession, just a slowdown in the economy. So, BC now. Well, the BC economy has been performing very well over the last 2 years. Okay, so the last 2 years, growth has been quite significant, a bit like Canada, a bit higher than Canada, but we are expecting a slowdown in the economy. Some part of the economy is slowing down because of a higher interest rate. But again, we're not expecting a recession in British Columbia, we're just expecting more slow growth. When you increase interest rate, you have an impact on people, and you have more impact in BC because I won't surprise you by telling you that the average mortgage payment, monthly payment, is higher here than the average in Canada. On the graph you see in green, it's the average mortgage payment in British Columbia at $2,500. I'm sure you're calculating, am I higher than the average, below the average? This is the average for the province. It's much higher than for Canada, and this is not surprising. The value of housing is higher here. But that means that when you increase interest rates, you have a bigger impact on the province. But what is interesting is consumptions is still growing in British Columbia compared to Canada. Salaries has been good. The job market is good. The unemployment rate is very low. That's probably explaining why, though, despite the fact that interest rate is increasing, consumptions continue to increase. However, the real estate market is really slowing down, and this is normal. So you can see the volume of sales in British Columbia is much lower now than a year ago. And this is expected. When you increase interest rates, you have a huge impact on the real estate market. The good news is the prices has not been down so much. In the greater Vancouver area, prices went down by 6.5%, which is much less than the Canadian average at minus 19. So the market here is very resilient. So yes, there's an impact of interest rate, but actually prices has been quite resilient despite the fact that interest rate has been increasing. We believe that we are at the end of this reduction in price because interest rates are going to stay at the same level and they will go down by the end of this year. So we should see a bit of a momentum in this sector by the end of 2023. Exports are going down as well, mostly because of lumber. As you know, British Columbia produces a lot of lumber. The real estate market is slow, not only in Canada, but in the United States. So that's the reason why our export is going down. But some factors are going to support the growth for this slowdown for 2023. And the most important one is actually the major investment in some big industrial projects. And you can see this is the number that you see here. It's actually the volume of investment, business investment in the province has been increasing, and it's not slowing down. And the reason is because some projects are very important. The one that is the most important is the LNG Canada project. It's a $40 billion project over 10 years. You can see actually on this graph, it started 5 years ago, and you can see that the business investment in the province has really been increasing because of this project. So this project is another 5 years to go, and because natural gas price is so good, the company LNG Canada is actually thinking about a second phase. Another major project is the BC Hydro Dam that is it's building now. So this is another $1 billion project. And finally, there's another future project, a pipeline, an extension of the pipeline. So these projects are going on despite the fact that interest rates are increasing or the economy is slowing down. This is going to help to support the economy. Another support of the economy is the fact that the unemployment rate is very low. So that's a sign that we're not into a recession. The unemployment rate in the province is 4.2%. This is the second lowest unemployment rate in Canada. The average in Canada is 5%. So some sectors are losing jobs, like retail, but some other sectors are performing very well. For example, there's 25,000 more jobs in construction today than a year ago, despite the fact that real estate is slowing down, just because major projects are contributing to create jobs in the construction industry. And manufacturing continued to do very well. Exports are strong in manufacturing, so that's another sector that is supporting the growth. So that's the reason why we don't believe there's going to be a recession in British Columbia, just a slowdown in the economy. Some sectors are going to feel it because growth is going to be quite different this year than over the last 2 years. But the economy is going to pick up again when the interest rates are going to slow down by the end of this year. So I'm going to conclude this presentation on 3 trends that we are following for businesses that we believe that are important. The first one is the labor shortages. You probably have difficulties to recruit people, and there's 2 reasons for that. The first one is the economy has been performing very well. So we have been creating jobs. There's more jobs today than a year ago. So that's the first reason. The second reason is the fact that our population is aging. 19% of people in BC are over 65 today. That's a much bigger percentage than 20 years ago at 13%. These numbers are very similar in Canada. I'm going to give you the numbers for BC because I think it's important to talk about BC, but the numbers are similar in Canada, same issue. So what happened when you get close to 65? You retired, and that's exactly what people are doing now. 45,000 people in BC retired in the last 12 months. This is twice as much as the number of people used to retire every year 20 years ago. Just because the baby boomers, there's a large number of them, so they are leaving the job market. So that's the reason why we have so much difficulties to recruit, because it's a lot of people leaving the job market to retire. Unfortunately, this is not over because of this number here. 22% of BC workers are over 55. That means that in the next 10 years, 20% or 22% of the workers are going to retire. I met a client of BDC in the manufacturing sector, and he told me that in his shop, 40% of his labor was over 55. That means that in the next 10 years, we're going to have to replace 40% of them. And the problem is the proportion of young workers below 25, there's not as many of them. So look at this graph. Look at the beginning of the graph. 20 years ago, in the year 2000, the proportion of young workers in British Columbia was higher than the proportion of older workers. Now it's the opposite. So that's the reason, that's the effect of the aging population. And that's the reason why we are going to have this challenge of recruiting still for the next 5 to 7 to 8 years. After that, it's going to improve. The baby boomers will be gone. So unfortunately, there's no magic solution to that. Immigration is part of the solution, and immigration is very strong in British Columbia, and the Canadian government has increased its goal in terms of immigration. But it's not going to be enough. As businesses, we have to find other solutions. We have published at BDC an important report. We look at 2,000 companies across the country to see what are the best strategies. And I invite you to visit our website at bdc.ca to get the full report. But let me tell you that the best strategy, the number one strategy, is actually technology. Businesses who are investing in technology, in automation, they are performing better than others because the technology doesn't replace people, but it replaces tasks. And you can continue to grow your business even if you don't have a lot of people. Second thing that we're watching for is salaries. Salaries has been increasing very significantly over the last 2 years. It's not going to be the case this year because the number of vacant jobs is declining. So we are starting to see that salaries, the last number we saw, salaries year over year increased by 1.2%. So we're not expecting to see salary to increase as much as we did over the last 2 years. Finally, I'm going to conclude on that. On the supply chain issue, that was a major issue over the last 2 years. It's really improving. The index of difficulties of the supply chain has been going down. And the most important part probably is the cost of shipping between Asia to the west coast of Canada has really been declining. Before the pandemic, it cost $1,500 to send a container between China and the west coast. It went up to $20,000, and now it's back to normal. This is a good news for businesses. It's also good news for inflation, because part of inflation was that the cost of shipping was increasing so much. So in conclusion, yes, the economy is slowing down. And actually, that was expected. When you increase interest rate to reduce inflation, the way through that is to slow down the economy. So we don't believe we're going to have a recession, but the next 6 to 8 months, the economy is going to, the pace of the economy, the pace of the growth is going to be much lower than what we have experienced over the last 2 years. By the end of this year, interest rate will start to go down, and that will create momentum in the economy. And in 2024, we should be in better shape than we are in 2023. So I'm going to stop here. I see my friend here. Are we taking some questions or?
Yes.
Yes? Okay.
Yes, absolutely.
Good.
Thank you. Thank you, Pierre. That was very interesting data, and I have to say I was one of the skeptical ones saying we'll be in a recession, but I've been convinced. So now we're going to be asking for some questions from the audience. If you do have any questions, please do go to the microphone here in the middle of this room. Please state your name, your company, and then you can ask your question. I ask you to be brief and respectful as well. So please make your way to the microphone for some questions. So I'll go ahead and get it started here. You mentioned exports, and you specifically mentioned cost of shipping. Now, can you comment on imports, the level of imports that Canadians are receiving from other countries?
Imports continue to do very well. We are a country where we import a lot of goods. And as the economy has been performing well and people have money to spend, the import has been very strong over the last 2 years after the pandemic. The good news is all the supply chain difficulties of getting the products is almost over. There's some specific sectors where it's still difficult, but overall it's much easier. So import is, I would say, back to a normal situation.
Thank you. Question?
Hi, my name is CJ Sidhu, financial advisor with CJ Financial and also a media guy. So my question is leading to what Dave said. It's a pretty good news presentation today. Nice to hear that. It's not all doom and gloom. So having said that, I just want you to address the political environment happening, the strained relationship with China, obviously war in Ukraine, and whatever happening in US and Canada. So the supply chain biggest issue is strained relationship with China. How you will address that?
There's a lot of that question. First, the war in Ukraine, in Canada, actually, the impact was positive for two reasons. Commodity prices went up, and we produce a lot of them. Second, we have accepted so far 125,000 people from Ukraine since the war. And in a context where we have a shortage of people, that's a good news. The negative impact of the war was more in Europe. Some countries this year are going to be in recession because of that.
Good afternoon. My name is Gurpreet Purewal. I'm an engineer at the Voltas Engineering consulting firm. My question to you is that you are good in predictions. So we want you to predict in which industry you see a growth, biggest growth coming up, the biggest wave that we can bank on. Thank you.
Thank you for the question. The answer won't surprise you. It's technology. Technology is definitely the sector that is going to have the highest growth in the next decade. It's already the sector that has been growing the most in Canada over the last 5 years. Don't get distracted by the number of jobs that are lost at Amazon, as Google, Facebook. This is really specific to, for example, there's not as many users for Facebook. That's the reason why they reduced the number of jobs. But the number of jobs overall in the tech sector has been increasing every year. And the biggest issue they have is they don't have enough people. So I'm going to surprise you. In British Columbia, there's more people today working in tech than people working in the lumber industry, mining, oil and gas altogether. That's how important this sector is for this province.
Thank you. Randall.
Oh, hi, thanks. Randall Height, I'm VP External Affairs for KPU and CEO of the KPU Foundation. There's a lot of speculation about food prices out there, so I'd like to hear your thoughts on why they are where they are and how California might affect them in the future and where you see them going, please.
Yeah, it's a tough question. Price of food has been increasing quite a bit over the last 2 years. There was higher demand, supply chain disruption, and what I understand from the industry is there was a lot of catch-up that has been done. A lot of prices were, according to the industry, too low. So because there was so much money in the economy, they took the opportunity to increase prices to become more competitive. So I understand that price of food is not going to continue to increase. It's not going to go down. It never goes down anyway. But you know, the prices are going to be much more stable this year. So they are not going to keep increasing the way we have seen over the last 2 years, because actually prices are much more elevated than 2 years ago. So we will get a break, but the prices will not go down. And probably there's always pressure on food. You mentioned California. They have this huge issue with water. So that probably will have an impact in the future. Probably not immediately, but in the future will probably have an impact on price as well. But the forecast for 2023 is prices are going to be much more stable this year.
Thank you.
Hi, Pierre. My name is Gurpreet Rai. I'm with Sussex Insurance. Pierre, just want to ask you a question about shipping container costs. So we deal with quite a few fleet trucking, small to medium-sized enterprise companies within Surrey's and the Lower Mainland. And during this whole scenario of shipping container costs and their intermodal costs just went through the roof, like by tenfold, if not 20-fold. And it almost turned their business model upside down, and some of them went bust. Are you aware if any of the international trade or government bodies are working closely together now to learn from that and try and put together some mechanisms or financial tools to make sure that those kind of increases don't happen again?
I'm not aware of such a things, but prices are not going to keep increasing. Two factors, like I had this graph that international shipping is back to normal in terms of containers. In Canada, what happened over the last 2 years, the price of the salary of trucker has increased by 25, 30, 35%. And there's a shortage of labor, so they had to do it. Also, there was some catch-up. You know, some of our clients told us, you know, the salaries has not increased before that for 10 years. So there was a lot of catch-up to do. This catch-up is done. So we expect much more stable in terms of price of transportation in the next few years, because the level, it's not going to go down, but the level is not going to keep increasing.
Thank you.
Please.
Hi, thank you so much for your presentation. My name is Afshan, and I'm with Simon Fraser University Cooperative Education Department, working largely with the Faculty of Applied Sciences. So thank you for answering the question. It was very heartening to know the technology sector is going up and it's going to go great. So I have a two-part question just as a follow-up. For the sake of our students, what we have noticed is yes, layoffs, especially with big tech, but a lot of these opportunities are in the East. So when you say that there's going to be tremendous growth in the future, are you thinking more innovation or startups, or are you thinking major companies moving into British Columbia, number one? Number two, very specific to sustainable energy engineering opportunities for students or people in general, do you see that happening in British Columbia? Thank you.
Yeah, two good questions. The first question, I'm not expecting a lot of companies moving to different parts, but the demand for tech services is just really increasing. A lot of companies realize that to become more efficient, they have to invest in technology, especially when they have so much difficulties to recruit people. So investing in automation, investing in technology, software, this is the way to stay competitive in the future. So that's why I believe that the demand for tech people is just going to continue to be very strong. For sustainable energy or economy, I didn't talk about it because right now, you know, the concern is more about the recession, but there's no doubt that this is where we're going. We, as a country, we have committed ourselves to reduce our carbon footprint massively by the year 2030 and 2050. In order to do that, we need to start now. And you're going to see in the next 2 or 3 years a lot of new regulations that will encourage people and business to reduce their carbon footprint. So in order to do that, we need to change our behavior, but we need innovation. We really need to innovate to be able to achieve our goal. So innovation in this sector is going to be very important. Mr. Biden, about 6 months ago, announced a new program, $390 billion that are going to be spent to reduce the carbon footprint. So a lot of money are going to be spent in North America for innovation, for new products, new way of doing things. And so people in that field are, you know, there's a lot of potential in that field.
Hi, Pierre. Thank you very much for the presentation. I thought it was great. My name is Andrew Smith. I'm with Bullwood and Company. And my question more is just I've heard the governor of Bank of Canada talk about possibility of stagnant inflation or consistent inflation. But I'm just wondering, like I know your forecast is mentioning potentially getting down to about 2.5% by the end of 2024. But is there, with the potential for high inflation staying, like I'm just concerned that he's going to keep raising inflation or the interest rates because prices aren't coming down, or if they get down to say like 3% or 3.5%, but not getting down to that 2% level, is he going to continue to raise rates?
Very good question. I don't think it's going to continue to increase rate, because inflation is really going down. But it could not be able to reduce rate as much as what we forecast. On inflation, there's a good and a bad news, I would say. The good news is prices are really, inflation is really going down, and two big forces that put pressure on price are disappearing. The war in Ukraine, the war is still there, but the impact on commodity prices is gone, and the supply chain disruption is pretty much gone. So this is the good news. means that we should be able to bring inflation down to 1 to 2%. The wild card is salaries. Typically, and according to the theory of the textbook in economics, when the economy is slowing down, people are losing their jobs and salary are not increasing anymore. This time around is different. There's such a shortage of labor that what we are seeing so far is the number of vacant jobs is going down, but the number of jobs is not, which is a good news for people, not good news for inflation. So the biggest fear of the governor of the bank is salaries are going to continue to increase too much to bring inflation down. And he said it publicly, you cannot have inflation at 2% if salaries are increasing at 5%. So he actually said to businesses, stop increasing salary. Well, that's easier to say than done, because we all know, you face people who won't, you have difficulties to retain your people, you have to increase salary. So that's the biggest risk right now, is if salaries doesn't stop increasing, you will have a tough time to bring inflation down. And to your point, interest rate might not go down as quickly as what we forecast. But the plan is working so far. So far, inflation is going down. So we'll see if at the end of the year, inflation would be low enough so the Bank of Canada would be able to reduce rate.
Thank you very much.
Thank you.
Hi, thank you for the presentation, sir. Very helpful, and we all got motivated. We are nowhere recession is there. So, question: you mentioned about 2 important projects in BC. Do you think that are these 100% confirmed, or we can see the environmental issues like we have seen in the past for Trans-Canada Mountain Pipeline and projects being disrupted like that?
I think the LNG project has been, building for 5 years and will continue to continue. I don't see any reason why they will stop it. Even in 2020, during the recession, they slowed down just because some of the workers got COVID-19, but in general, they continue to build the project. And this project looks good 5 years ago. This project looks even better now, because the price of natural gas has been increasing. A lot of countries around the world are moving away from coal to natural gas. So that's the reason why not only they won't stop this one, but they are thinking to a second phase. So this is going to be an important project for the province for the next 5, probably for another 10 years after that.
Okay, and one quick question. We heard the Prime Minister committed billions of dollars for reforming the healthcare system. With government spending so much, adding to the deficit, do you see the impact on interest rate on that?
Healthcare is going to be one of our big challenges as a country and as a province because of the number I've showed. 19% of Canadians or BC people are over 65, and in 10 years it's going to be 25%. Our healthcare system was built when we had a young population. So this is going to be quite a challenge for every province in the country. It's just because our healthcare system was not built for so many older people. So I don't know what is going to be the solution, but it's going to be a challenge.
Okay, thank you.
Okay.
Great presentation, Garrison Duke from Diversity Community Resource Society. I wanted to know what's your thoughts on the impacts of giggers on the economy, and do you think the gig economy is sustainable?
I think, we gave this name, but people who have been working as a self-employed, offering their services around, has been around for a long time. We had a different name for it. So yes, I think it's important. Yes, I think it's going to be sustained, just because there's always been some people who prefer not to work for one employer, work for different employers. And also there was always business who are looking for short-term services, for part-time. So I don't think it's going to disappear. I think it's it's part of doing business. Sometimes you need more capacity. Sometimes you need a specific service You don't need somebody full-time, but you can hire somebody for a number of hours or a number of weeks. So I think it's just going to continue to go on.
Yeah. Thanks for your insight. I think it's been a hidden piece of the economy for many years. I mean, in my generation, you had 2-3 jobs, school, you were just hustling. Now it's gigging, but I think it's always existed. But I think with the different industries exposing it a little bit more and making it more of a high profile. Good analysis. Thank you.
Okay, thank you.
Thank you for the questions. I do have one question that I would like to ask you as well, Pierre. What are your thoughts on tax reform by the different levels of government to make Canada more competitive globally?
It's a tough question because, you know, we have taxes and we pay healthcare, transportation, education with that. It's hard to reduce taxes. You know, I understand that some people would like to pay less taxes, but at the same time, we all want free healthcare, free education. In order to be able to do that, we need to have money coming from people. And in the context where we have an aging population, frankly, I don't see how we will reduce taxes. I think we have to find other ways to increase our productivity because we have so much demand from, you know, the pandemic was a good example of that. There's so much demand from different group in our population. I don't see, you know, I'm an economist, so traditionally we are for less tax, but frankly, in the context, I think the future is going to be more working on the demand side than on the tax side.
Thank you very much. And a round of applause for Pierre.
Thank you.
And at this time, I would like to invite Jackie Griffiths back on stage.
First of all, thank you to the audience for such amazing and engaging questions, and thank you, Pierre, for a riveting discussion. I think what I take away from this is that 2024 will in fact be a stronger year, and 2023 will start to level off. I just want to reinforce and say how important your comments were, especially for us in this region as it relates to innovation and as it relates to technology. If we're going to be the strongest, most resilient economy, we need to really consider how it is we work together to advance those opportunities, to make sure that that 63% growth we've seen in the last 5 years in technology, that we in this region are getting what we deserve within the country of Canada. So thank you for very much empowering us to take on that call to action, and thank you once again on behalf of Invest Vancouver for the opportunity to hear everything you had to share today.
Thank you very much, Jackie. And thank you once again to our sponsors, our co-presenting sponsors, the Business Development Bank of Canada and Invest Vancouver, our progress partners, BDC, Chamber of Commerce Group Insurance Plan by SNF Group Benefits, the law firm of Fasken, Scotiabank, and Western Community College. Thank you.